Good morning, traders and investors. I'm Noah BM, and welcome back to the weekend edition of Wealth Down, where we're going to discuss tariffs and trade tensions, a weakening U.S. labor market, Apple's major investment, and mixed market performance. Also, we're going to go over a couple of earnings report from Eli Lilly, HIMS, Uber, Shopify, Airbnb, Palantir, AMD, Supermicro Computers, McDonald's, and Disney, and many, many more. Now, we're just going to fly over them. Most of them are already covered in my daily reports, so definitely check out those videos. But we're going to talk about why they rose, why they fall, how their earnings looked, and what their future outcomes looks like. Now, we're also going to do after that, at the end of the video, my weekly trades. I'm going to show you what trades I made, how I performed this week, and of course, we're going to do a quick preview of the next week. So let's get started. We're just going to go over the major news that moves the market this week. Now, tariffs and trade tensions. The tariffs once again dominated the headlines of all of related markets. The US government in ahead with President Donald Trump opened up with 39% tariffs on Switzerland, which just made them woo. And of course, they included luxury watches, chocolate, and gold. Now, this move is particularly significant for Switzerland, a major exporter of gold to the US, because once this tariff lands, it's going to majorly impact Switzerland. Now, these tariffs, one of the highest imposed by Donald Trump, has led to a small sell-off in some of the Swiss asset markets and raised concerns about its impact on the global gold market. In response, Switzerland's officials have called for new talks with the US President Donald Trump, but a last-ditch effort by the Swiss president to avert the tariffs failed earlier in the week. Meanwhile, the other countries, including Canada and India, were also hit with new or increased tariffs, even further fueling fears of the global trade war and putting pressure on a variety of industries. As now, Donald Trump visited India's prime minister, trying to convince him to buy less Russian oil. He refused, and then Donald Trump hit him instead of with 25, now with 50% tariffs. A weakening labor market still looms on the US stock market because a weaker than expected jobs report caused some markets anxiety. Last Friday, the report indicated a significant slowdown in the job growth, leading to especially high speculations that the Federal Reserve might consider cutting rates to stimulate the economy. Now, this possibility, of course, in turn, draw down the bond yields. Now to Apple. Major news on Apple. US President Donald Trump and the CEO of Apple, Tim Cook, met aimed at the trade turmoil. Apple made a significant announcement pledging to invest an additional $100 billion in the U.S. manufacturing over the next 4 years. Now, new commitment brings Apple to a total planned investment to the U.S. of $600 billion. Also, if you take a quick look on Apple stock, it just ripped after that announcement, 3 consecutive days of growth, bringing the stock now up to $230 after the market closed on Friday. The company's announcement came just days after the CEO Tim Cook expressed concerns about the financial impact of the tariffs. The move is seen as an effort to bring more of its supply chain to the US and potentially mitigate the effects of future tariffs. And I just showed you the news was met with a very, very positive reaction on Apple stock. So congratulations to all you Apple shareholders, me included. And last but not least, a mixed market performance. The week ended on a mixed performance. Take a look here at the S&P, where it's previously on Friday closed on the 1st of August up underneath the 20-day moving average, is now slightly above, closing up with 6,396 points, and also the NASDAQ closing up with 23,713 points, also above its 20-day moving average. Now let's go to earnings. Major companies reported earnings this week. And some of them have their shares drop, some of them have their shares rose. Let's start up with Eli Lilly. The pharmaceutical giant reported improved Q2 2025 results with revenue surging to 38% year over year to 15.56 billion and non-GAAP EPS of $6.31 a share, both handily beating analyst expectations. Now, this was fueled by strong demand for its increased therapeutics like Zepbound and Mounjaro. However, despite these stellar numbers, the stock fell 13.37% in pre-market trading, and also after its earnings report is still fell once more, bringing it now down to $624 a share. So it has a major downturn in the markets. Now, this counterintuitive move was likely driven by the broader negative market sentiment and the fact that the company full-year guidance rise, now while positive, may not meet in some investors' eye the expectations, especially after a significant run-up in the stock market prior this year. Also, check out the full video on Eli Lilly that I did just one day before to go even deeper in the stock and what my predictions are for the future of it. Okay, next company was Hims & Hers, ticker symbol HIMS. The telehealth company delivered strong revenue growth with their revenue up 73% year over year to 544.8 million and non-GAAP EPS of 0.70 cents a share, beating estimates, of course. The company's subscribers base also grew 31% to 4.2 million, that is. The stock rose by over 2% following the report, as investors focused on the company's robust line growth and expanding customer base. Despite a slight miss on revenue, as you can see here, 1.24% miss, the stock went, first of all, up then down, and then we are again here in some slight downturn underneath the 50-day moving average, with the stock sitting currently at $51.97 a share. Next up, Uber reported their earnings on August the 6th. Now, the ride-hailing and delivery giant posted solid Q2 2025 results with revenue up 12.7 billion, a 17% increase year over year, and adjusted EBITDA of 2.1 billion, up 35%. The company also announced a 20 billion shares repurchase authorization, a significant move that signals major management confidence in the future. Despite beating expectations on both top and bottom line and announcing a massive buyback, the stock, as you can see here, plunged on its earnings, rose up once more, and then went down once again. Now it's currently sitting on its 20-day moving average, just hit the 50-day moving average, and we're just going to see how this behaves before we make a decision on the stock. Next up, Shopify. The e-commerce platform had a fantastic quarter for the beginning of 2025, with revenue up 31% to 2.68 billion and a non-GAAP EPS of $0.35 a share, far exceeding analyst forecast. Its gross merchandise volume, GMV, also jumped by over 30%, and the stock soared, as you can see here, 20% following the news, as investors were impressed by the company's ability to maintain strong growth and profitability despite a challenging economic environment for the e-commerce market. The company's strong guidance of the remainder of the year further fueled that rally. Now it has come down a bit, but it's still above its 20-day moving average, far from 130, currently sitting at 149. Next up is Airbnb. The home sharing company reported a strong Q2 2025 earnings with a revenue of 3.1 billion. Just open up the earnings here, a 13% increase year over year, and a non-GAAP EPS of $1.03 a share, an increase of 9.9%. Now this has beaten, as you can see here, both on earnings and on revenue, the estimations. This is why the stock went actually down, sitting currently underneath of all its moving averages. Although the company also announced a new $6 billion stock buyback program, another sign of healthy balance sheet and management confidence. However, the stock, as you can see here, went down 6% in the after hours. This decline was likely triggered by the company's cautious guidance for the third quarter, which suggested a potential slowdown in the revenue growth and tighter profit margin due to its increased investments. Next up, the current favorite of the markets, which is Palantir, still, even after its earnings up. As you can see, no major surprise here. Palantir continued with its winning streak, reporting revenue up 48% to $1.004 billion and a GAAP EPS of 0.13 cents a share, both ahead of expectations. It's the US commercial revenue, which is a key metric for the company's growth, was particularly strong, growing 93%. The stock is up, it's above its moving average, which currently sits at 161, the 20-day moving average, and it's up $186 a share. Okay, next up is Advanced Micro Devices, also reported earnings. AMD, the chipmaker, reported record Q2 revenue of $7.7 billion, a 32% year-to-year increase, driven by strong demand in the data center and the AR market. They also posted very good results for the gaming segment. Now, while its adjusted EPS slightly missed estimates due to the one-time change, the strong revenue growth and positive outlook of the next quarter led to a broader rally in the semiconductor. Now, right after they reported their earnings, the stock went down, then went up again. It's currently sitting above its 20-day moving average at $172 a share, and its moving average, the 20-day moving average, is $164 a share, and some breadcrumbs there. Next is Super Microcomputers, SMCI. While Super Microcomputers reported Q3 revenue was up 19% year over year, it missed analytics expectations and was down from its previous quarter, which the company attributed to customer delays. Now, this, coupled with a lower full-year revenue guidance, caused the stock to drop significantly, as you can see here, up from $62 a share, its last high. Now it's hit the 200-day moving average, just sitting on it at $44.6 a share. Now the pulse of the market, which is McDonald, reported their earnings jumped slightly on their earnings report. The fast food giant's solid Q2 results, which revenue growth up 5% to $6.84 billion, that's with a B, and diluted EPS of $3.13 a share. Both beating estimates. The stock remained relatively stable as investors saw a steady performance. This also includes a strength in the international market and solid balance sheet. As always, McDonald's is one that takes the pulse of the markets. Now, it's currently had a couple of days of pullback, and the 20-day crossed the 200-day, the 50-day, but it still has the 100-day moving average above it. So it has a lot of work to do until it's going to go back there to its last peak, which was $326 a share. It's currently sitting at $305 a share. So it still has some work to do. Also, for your dividend holders, the dividend ex-date is on the 2nd of September, expecting a $1.77 per share dividend, and with the payment date of 16th of September. Last but not least, Walt Disney, again coming back. The Walt Disney Company, ticker symbol DIS, reported the Q3 earnings, which was a standout, with revenue up 2% to $23.7 billion, and a adjusted EPS, earnings per share, there is of $1.61 a share, both exceeding expectation. Its theme parks, which is a major driver for its revenues, and also streaming services, was their primary driver, and the stock moved slightly up on its earning, but it came down after that and just sitting there. Actually, it exceeded its 100-day moving average, so I'm expecting this to come down and hit the $108 a share marker, which is sitting at the 200-day moving average. So yes, I am expecting a correction for the Disney company, which had a good run here from its April lows from $79 a share to the top of $124 a share, almost doubling there. So those of you who bought Disney, maybe up here was some good profit taking time. So that's it for the report. Now let's go into trades. What trades did I do this week? So I'm going to pull out my trading app here and let's go over the week. This is the week from the 4th of August till the 8th of August. And this is week number 32. So let's get started. First trade was selling some Palantir shares. Palantir Technologies, ticker symbol PLTR, on the 4th, right on Monday, had a gain of $24 or euros converted. That's a gross profit and a net profit of $20.54 a share. After that, sold a bit of Rheinmetall, the major ticker symbol RHM, also on Monday, 4th of August. This is a major weapon manufacturer here in Germany and had just 11 euros a share. And since then, now this is Palantir. I should have held on to Palantir, by the way. Now Rheinmetall since then is on a downtrend here. It's not oversold, and I could dip back into it if the RSI hits here a lower level. On the MACD, it's still on the sell signal, so I'm just going to wait here for some sort of signal. Then this is again a trade for me. Next up, sold my gold position. Just physical gold. Now the ticker symbol is PPFB, but this is a European ticker symbol, so there are far better ticker symbols for this. This was on Tuesday, the 5th of August, and made 14.8 euros a share gross, and that would be $12.67 a share. So small trades here. Then I misread the market, went back into Rheinmetall, also on the 5th, and suffered here a loss of 8 euros a share. So this is with minus. Also on the 5th, I made a couple of changes in Mercado. I don't have Mercado Libre in there. Mercado, yes, I have it. Mercado Libre, ticker symbol MELE or MELE. On the 5th, on Tuesday, made 86.8 euros a share on this trade. Now, MELE since then is up and down. So this is where the trade happened. I bought it down here, sold some up here. Then this is the 6th. So this was the 5th. This is the 6th, 7th, and the 8th of August. So let's go over this a bit. I see a lot of future for MELE, really bright future. This is why I still bought and sold once more a little bit of MELE. You know what? Let's just do a summary here of the 5th. Let's bring out here the calculator because it's actually the following. So I had my first trade. I did three trades on MELE. So 86.8 plus 14.4 plus 62.9. So a complete of 160, a sum of $164.1. So let me just change this. Where's MELE? Also, I could have just extracted here from Rheinmetall. No, it was different dates. That's why I left it in there. So let's change MELE to this update. And there we go. Now, then I sold just a tinge of Costco. Costco hit my very first Costco. Ticker symbol cost. Hit my first limit on the 7th. And I sold sold one share, made 10.97 euros a share there. Also sold Amazon. Also hit both had a very good run there on the 7th. Also made here 14.6 euros a share. Then sold Tesla, completely exited this position on the 7th at 10.3 euros a share. And now for one of the big ones, which is exactly as it says there. You could have expected this. I sold some Apple. It hit my first major sell point. It was triggered and I made 332.55 euros a share on that, not a share, but in total 300. 32 euros on that trade. So this, let's just summarize this up. It was a interesting trading week, most triggered by Apple. Major, as you can see, as you saw in the report, some company had good reports and came up their shares. Some had bad reports and still jumped. So interesting week. The week of the 32 of August ended in $489. So it was a good week. My benchmark is always I want to hit the $500 mark. I didn't manage that actually. So I still say it was a good week. Now for the next week, I would say caution. Caution, because let's just take a look here at the calendar. Next week we have on Monday nothing. On Tuesday we have core inflation and also PPI on Tuesday. So we have a Monday nothing. Tuesday we have inflation report. Wednesday nothing. On Thursday we have PPI, and on Friday we have retail sales and the Michigan consumer sentiment. So I would say take care next week. Maybe sell some puts, but other than that, wish you a lovely week. Have a lovely weekend. If you're watching this on the weekend, we always do these on the weekends. Check out my previous videos where I analyze some of the companies. Going to leave links in the video description. I'm going to leave the entire report of my trades down in the video description. Check them out. Have a lovely weekend once more. I'm Norbert BM. Like and subscribe. Catch you next time. Bye bye.